Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin, but first, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you just want to show some general support for what I'm already doing on YouTube, then you can join Tier 1 for £5 a month, and it will also bag you an exclusive video each week that won't be available on YouTube. If you join Tier 2 for £10 a month, you'll get the same exclusive video from Tier 1, but you'll also get voting rights towards monthly deep dive videos. You'll get access to all of the educational videos on the Patreon, including my original Elliott Wave Theory series. You'll also get early access to YouTube videos before they become available, and you'll also get access to the public Discord, where there is a multitude of channels in which you can engage with the community and me directly. Now, if you want to join Tier 3 for £15 a month, you get all of the things in Tier 1 and Tier 2, but you also get access to my monthly dividend calendar and stock rating system. This is where I list my favourite stock picks for the month, all of their ex-dividend and payment dates, and then give all of the stocks listed a rating out of 30 based on my own proprietary rating system. I will also offer the service of looking up any ex-dividend or payment dates for stocks you may be interested in if you can't find them for yourself, and if you have a particular stock that you are interested that isn't on the calendar of a stock rating system, I can look at it, rate it and come back to you with the results. Alright, thank you for listening guys, now let's get back to the video. Alright, welcome back guys, and let's get on with our review of Bitcoin. So we're going to be looking at some Elliott Wave analysis, different counts we've got. We're also going to be looking at some basic technical analysis. So the first thing I want to do, we're going to look at this bullish count, but before we dig into the detail, I just want to take the count off for a minute, give everybody a quick reminder of what we're looking at here, and run through it in a more simple manner. So we've had this move down, which is either a 3-wave move with 335 into an expanding flat, or it's some kind of 3-wave move here that I don't particularly like, but some people are drawing it that way, or this is a 5-wave move. Okay, so that was our correction. Off of the low we've had a 1, 2, 3, 4, 5 into a 1, A, B, C into a 2. We're now in a 3rd wave and this thing's going to keep going higher. Yes, we will have a greater correction at a smaller wave degree of 1, 2 again, but we are going to keep going higher. So that's the basic bullish count. Okay, we will cover a bearish count as well, but I just wanted to point out that this support and resistance here, this was resistance here, I pointed this out in the last episode, resistance here, resistance here, resistance here, and proved to be support here. So previous resistance becoming support at a major Fibonacci retracement level. This is always reassuring. And we have Fibonacci retracement here, shows us that we came back to the 50% level in linear scale, which is excellent. Let's just remove that base support line so you can see it. Came back to 50% in a 3-wave structure and bounced. Also good. We continue to impulse as well as we head higher. And so now let's come in and have a look at this actual bullish count before we start considering all the alternatives. So as I said, 1, 2, 3, 4, 5. Now this isn't the only bullish interpretation we've got. We've got another one to look at as well. So let's just come in and have a quick look at the recent price action and see what we can see. So when we come down to such a small time frame here guys, we have to appreciate the fact that our count can be interrupted very quickly. Because it's not until we see the larger wave degrees that we can really establish where we are. But the best I've got for us at the moment is after completing this 3-wave move, we have a 5-wave move into a minute 1, WXY into the 2, we get a 1, 2, 1, 2, 1, 2 extension here in the 3, 3, 4, 3, 4, 3, 4, now done, looking for the 5 at minuet degree to find the 3 at minute degree, which will result in a wave 4 correction at minute degree, and then a continuation in a 5, which will finally complete in a 1, and then we'll have a larger correction in a 2, and so on and so forth, and then we'll move up into minor degree wave 3. So that's the best I've got on the small time frame at the moment, and while it holds, I'm still bullish. As I pointed out in the last episode, for as long as these lows hold, as I was saying at the time, I was bullish. Well, we've continued to see impulsive behaviour since. Okay, so that's the one bullish count. Now let's consider the alternate. We're going to switch this off and have a look at the alternate count here. Okay, so this works slightly differently. This works on the premise of this pitchfork here, and it's the idea that rather than going 1, 2, 3, 4, 5 into a 1 up here, so instead of this being a 1, this is a 3, and we've got 1, expanding flat into a 2, 3, zigzag into a 4, deep 4, taking us out of the geometry of this pitchfork almost to the outer bound, and now we're pushing up in a 5 to find our 1. So instead of the intermediate 1 being here, the intermediate 1 is here. Alright, and then we will come down in a deeper 2, breaking this trend completely with a 50% retracement or more, or perhaps a little less, but I would expect to see 50%. And then we would start our actual wave 3. So essentially both of these are bullish cases. This one just offers a second bite of the cherry at a deeper level. So although it's not my preference, I would prefer it to happen. I know that sounds weird. It's like you prefer this to happen, but it's not your preference. No, my preference is based on probability, and my preferred count is the one we looked at first, the bullish count, which is that we are already into an intermediate wave 3. But if this turned out to be correct, it would be most welcome, as it would give us an opportunity to buy a wave 2 pivot before going into an intermediate 3, and lets us buy Bitcoin at an even lower price. So a move back in this would bring us roughly to the 50 to the 60% or 61.8%. As you can see, this should confirm the break of trend here, the break of this market geometry, give us more confidence that we've completed a larger wave degree. Okay, so let's now hide this. So there's our bullish counts, and now we should look at some bearish alternatives. Okay, so I discussed in the previous video, we'll go over them very quickly, two ideas. One was an alternate triangle, like this, that we've gone, however you get it, 3 waves into an A. I don't like this one because this looks like a 5-wave move. This could be interpreted as a 3-wave move with a C shorter than the A. Also something I'm not particularly fond of. I'd like to see C come to parity with the A, or perhaps even extend, but it can happen, and you can have a short A. The only rule, short C, the only rule for the C, if this is A, B, C, is that the C must clear the A. Otherwise it's a truncated C, which is just insanely rare. So we don't have that to deal with. We just got a shorter C in this scenario, in which case we will reverse here into 3 waves into the C of the triangle, into 3 waves into a D, into 3 waves into E. That will finally be primary wave 4 complete, primary wave 3 here, and off we go higher. Right, so that's the triangle idea. Not particularly a favourite of mine. The alternate to that is the flat I mentioned. We don't have to concern ourselves with this until we come to 90% retracement in a wave B. We are getting bloody close. So if we were to come up to 90% of the high and get a violent reversal from here, it's possible that this is perhaps our 3-wave structure that we've used for our completed 4 expanding flat into an adjoining B wave zigzag. Okay, and then 5 waves down in a C. That would be an a possibility of a regular flat. Okay, now there is one more that's been brought up in the Patreon group by some people. I can't recall when, but I've seen it, so I figured we might as well look at this as well. And this is an alternate bearish case that this could still be a zigzag. Okay, now that's this idea. That we've had 1, 2, 3, 4, 5. Now I'm happier to accommodate this in the triangle because this accommodates my bias, and it is a bias. I can only say what my eyes see. I see 5 waves here, so this interpretation fits better than a 3-wave start to this move. So I see 5 waves here, and then we get a very rare W, X, Y, X, Z for our B wave. I'm not particularly fond of this, because this looks bloody impulsive, 5 waves. Okay, this looks pretty impulsive, 5 waves. Now this admittedly looks like 3, but there is 5 in the start of it. But yes, fair enough, that could be 3. Now you could argue, well, what about this? Could that be free? Yes, you could squeeze 535 in here, but this is tricky. You don't get a nice clear zig. You got a free wave here, 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 but this gets dodgy as free waves. This looks more like an impulse to me, but let's just give it the benefit of the doubt and say fair enough. It's a very deep B with a and therefore we don't have to deal with that short C for a standard zigzag. We've got relative parity here with the Z wave and the Y wave here and the W. The W is a little short to be finishing here, but we can live with that for a double zigzag. So this would be a pretty deep retracement for a double zigzag. We've gone past the 61.8, past the 65, and we've gone probably past the 78.6, I think. Let's have a look. There it is. And yeah, we've gone past the 78.6. So very, very odd zigzag to have such a deep retracement in the B. So close to 90% now. The flat pattern fits better, but we don't like the free at the start. So this is why, even though these scenarios are possible, and even though we should entertain them as alternatives, I'm still going to lean into the bullish case for as long as the count supports it. And for the moment, my bullish count seems to be working out. I'm going to continue to support it. I expect larger wave degrees corrections to come, but then we can observe whether or not they invalidate the broader count, can't we? So, but we can't do that till they happen. So for the meantime, I'm just going to stick with the bullish interpretation. Okay, so now that we've looked at our various Elliott wave counts, I don't think there's any more for me to look at. If you want to know what some of my long-term targets are for the bullish case and the bearish case, I've covered them in previous videos, especially the bullish case. So you can go and look at last week's video for something like that. But for the meantime, that's basically what I'm seeing from an Elliott wave perspective. This is my primary count that we've done 1, 2, intermediate 2. We're now in an intermediate 3 and the highs of the next target. We may have to have a smaller time frame pullback at minute degree before we clear those highs, as we are going to hit resistance. It's just obvious, isn't it? I mean, look at all these. There's a top here, there's a resistance here, there's another top here. So, and we're right at that level now, so we're bumping into resistance. I'd expect to see some kind of stoppage here for the meantime. If it doesn't and we smash straight through this, that's even more bullish. Okay, so bias is on the bullish case at the moment. That does not mean I'm right. It's just the way I'm leaning at the moment. All right then, so let's bring up our technical indicators. And oh, I'm not sure if I mentioned it now. I've been talking for a while. The wick here that came down, it did not break the count in any way. It did not interfere with the Elliott wave count here. It did not interfere with any form of invalidation. So we can accommodate this wick and still be perfectly happy. Now, I know you're going to say, but Tom, it only happened on this exchange. That's fine. I appreciate the fact that it didn't happen on other exchanges. But if it had, excuse me, invalidated something, we could then transfer the count and look at something else, but that's a lot of work, and since it didn't do anything, which it shouldn't do, I'm perfectly happy to just accept it and live with it, since it hasn't in any way undermined the count. Speaking of which, let's just remove the count, get it off the screen, and let's bring up and that lower impulse bid as well from the 2018 low. Let's bring up our moving averages and come out to the daytime frame. Okay. So we have on the chart four exponential moving averages. We have a 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have an RSI set to a 10 close with the green 30 level representing over the sold and the red 70 level representing over bought. We have the MACD here with a blue for the average and an orange for the signal here, and they're respectively 10 and 20 in length. Okay, so what can we see? Well, on the daytime frame here, we can see how we came back through the 10 and the 20 and the 60, traded through the 250, traded back above them, dragged the 60 and the 10 and the 20 below the 250, then back above. We've since come back to test the 250 exponential moving average. Now we know that this 250 here coincides with the pitchfork. to contain this forward move. We know that it also coincides with a 50% retracement, and we know that it coincides with this previous resistance and this previous resistance. A major support should have been expected here, was expected here, and occurred here. So that's all good. Alright then, so since then we've brought the 10 and the 20 back up above the 60, and now the 250 is starting to trend up a little bit more aggressively than it has been during this phase, obviously. So we're starting to turn up, so all of this is quite bullish as well. Another thing I find quite reassuring is if we look at the MACD for a moment, just bring this up to the full screen, we can see that we're saying, if we imagine this to be our Elliott wave count for the moment, okay, so we're saying this is a 1 and this is a 2, and now we're in a 3. What's reassuring for me is the fact that even though we haven't completed a minor wave degree inside of this intermediate 3, we're still at minute degree. We've already taken out the high in the MACD here with this high. In our first wave up, we've already done that. This has the signs of a wave 3 getting ready to really blow up. Okay, it's not guaranteed, but it's a nice strong shift into bullish momentum. You know, we've had all this coiling during the corrective phase, positive, negative, move below the zero bound in the MACD, flush down way below it, back to the zero bound to test it, back, through it, down, less bearish momentum here, higher low in the MACD, here, confirming our 1, well not confirming it, but giving us the suspicion that this is a 1-2, and now a strong thrust back into positive territory on the histogram here, which easily clears all of the previous highs here in the MACD, and now we've got the average and the signal trending higher as well. So that all looks like a nice strong return to bullish momentum. Okay, like I said, no guarantees, but it just looks really good. The RSI has yet to take out the previous high back here. Okay, we're getting close. Right, now on the long term, on the daily time frame, we've got all this noise, right? So let's just come back and establish our wave 3 peak, right? So we think we peaked here if we're bullish. This is 3, this is 4. Okay, so A, B, C, 3 into 4. Now we've got our peak of our RSI where we expect, we expect to find it in one or the other. This is the 3 of the 3. Here 3, and this is the bigger 3, primary. Okay, so we get that big peak in the RSI around here, then we get a lower peak in the actual completion of the 3, then we get this huge divergence, right, between price and RSI. High, higher high, higher high, lower high, lower high, lower high, flush down into oversold conditions. Okay, so that played out. What we see is the break of this trend across these highs. Okay, bump, 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 bump. We carry on down, and we can see that we're now well above that trend. Doesn't matter how many highs you take into account, and we come back having moved above it. Excuse me, to come back to test it to bounce. So that trend got broken once this correction completed, and we can see that in the shorter time frame, we can make a similar assumption. We can't be completely certain, but we have a series of lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We come from overbought here, and we come down to oversold here, and now we have a trend of higher, high, higher low, higher high, higher low. Right, so this seems to be confirming that this area was extremely strong support, and we've bounced, and we are now continuing a new impulse wave higher. That's it really, guys, at the moment. The MACD seems to be confirming the same. I will say, as a caveat, because I'm not psychic, nobody is, that sometimes things can look incredibly good right before they turn around and fuck you. Excuse the language, but that's just how life works sometimes. So even though I've still got this bullish bias, I am aware of the fact that we're approaching a 90% pullback, which could be a flat. I'm also aware of the fact that this could be a very, very rare WXYXZ. So if we break down violently from here, we have to be on guard. We have to look at our momentum indicators. We have to look at the kind of daily close we get. We have to see if this move down is impulsive or corrective. Alright, and then we can start to weigh up the larger counts, bearish, bullish, alternatives. Alright then guys, that's all I've really got for you this week. I think I've still managed to waffle on for a fair old time. Actually, it's not bad at all. It's like 20 minutes. I don't think there's anything else to cover in the meantime. If we see any significant downturn in the price of Bitcoin, which doesn't fit our bullish interpretation at the moment, I will come back with an update video probably before the normal weekly video and try and give you guys some information about it. But in the meantime, I'm expecting a correction to come on the smaller wave degree sometime soon. We're hanging around some major extensions, some major targets, but the broader count on the larger wave degree, which is this 1-2 pivot, this I think is intact and will lead us higher. Alright then guys, take care of yourselves, all the best, and I'll be back with you hopefully at the weekend, if not next week. Take care, bye bye.